No income verification, DSCR loans, debt service coverage ratio loans. So what debt coverage service ratio loans are, it's an investment product which allows investors to invest in properties without verifying their actual income. Yes, it is a pull on their credit. However, there is also no income verification requirement. So let's talk about it. So what it is the borrower or investor typically has to put down 20%. Putting down 20% as well as having 6 months of reserves showing that you can pay for the home. 6 months of the reserves for the home. So let's explain what reserves are. Reserves are equivalent to 1 month of the PITI, which is principal, interest, taxes, and insurance payment that you have to pay on the house. Now, with that being said, the investor, it has to be for investment purposes, and we will take the cash flow of the property. Now, let's say we have a property that someone's buying for $200,000, and let's say the property is vacant. What we will do is we will do an appraisal, and once we do the appraisal, we will also get a market rent analysis. What the market rent analysis does is it will tell us what the market rents for said property. Let's take a 3-bedroom, 1-bath property, and let's say that it rents for $1,500 a month, and that's what the market rents are. As long as the principal, interest, taxes, and insurance on that property is equivalent to $1,500 or less, then we typically can move forward with the project. Now, being able to shop this around, I have different investors who can go below the 1-to-1 ratio. The 1-to-1 ratio is just an example I use. Let's say that it doesn't meet the 1-to-1 ratio, then you typically have to put down 25% versus the 20% just to cover that ratio difference. Let's say that you have a property that you currently own, and for the last 12 months, you have a tenant in place, the same property for $200,000 that the market analysis says that it's a $1,500 a month rent. Let's say that property is currently renting for $1,800. As long as we can show that the property has been rented for 12 months, $1,800 a month, and we can show a paper trail, we have the ability to use that $1,800 a month to qualify you, which will then, as long as the coverage is 1-to-1, in this example, it's a 1-to-1 ratio, we can move forward without you having to put 25% down. The purpose of a DSCR loan is to help investors buy properties. Some investors write off all their money on their taxes, so they don't have the ability to show that they have the money. However, they do have the credit. They do have the down payment, and they do have the reserves. So this is a way for them to be able to purchase additional investment properties without having to show a ton of paperwork because they've written everything off on their taxes. The second important thing is this product is also used for investors who have utilized conventional financing previously. So example, Fannie Mae will only allow for you to have 10 conventional loans at one time. So if you're an investor, you currently have 10 loans that are back through Fannie Mae, and you're looking to get an 11th or 12th, 13th, 20th property, then we can use the DSCR loan to help you qualify because it's not backed by Fannie Mae either. So DSCR loans are strictly for investors. They are not for people looking to buy it as a first-time home buyer. They're not for someone who's looking to buy a multifamily home, live in one property, and lease out the other units. It is strictly for investors. Now, there are some situations where the DSCR loan that you have to own a primary residence for at least 2 years. Some cases, that's the stipulation. As of right now, and I'm constantly seeing those stipulations upgraded and changed. So there is a possibility that you can be a first-time home buyer, not own your home that you live in, and still be able to purchase an investment property if you can show the 20% down and have 6 months reserves on the property that you're looking to buy as an investment property. You know, one of the downsides to a DSCR loan is that it typically has a higher interest rate. So it's higher than market interest rate, which some people kind of shy away from. However, there is no mortgage insurance, which kind of offsets the difference. And just remember, when you're looking to invest or you're looking to purchase a home, even if it's a primary, if you're the least amount of paperwork you provide, the higher the risk it is for the person lending the money, the higher the interest rate is typically going to be. So you want to make sure that you understand that, you know, in a vehicle or a property like this, investment situation like this, you're going to pay a little bit higher than market rates. The caveat to that is if you have a tenant in place and they're the ones paying the interest rate. And at some point when rates decrease, you do have the ability to go back and refinance the DSCR loan to get a lower interest rate. So another, not necessarily downside, but another guideline to DSCR loans is they typically would like for you to hold on to the property for 5 years. So they typically have a stipulation of if you sell or refinance the property within 5 years, that you have a prepayment penalty that you must pay. A prepayment penalty means that there's an allotted period of time that you have to keep the property. And if you do something, sell, refinance, or that company no longer holds the mortgage for that full 5-year term, that you have to pay a penalty to get out of that contract. There are some situations where you have the ability to pay that up front if you know you're not going to hold it, or getting with a lender who offers one where there's no prepayment penalty. In those situations, there's typically going to be a higher interest rate because that lender wants to make sure they collect some money on this property while they have it to make it a worthy investment for them as well. With DSCR loans, you can close them in an LLC. So a lot of times I have buyers come to me and say, hey, I want to buy an investment property and I want to close it in my LLC. This is a vehicle that we use to close people's properties in their LLC. It typically does not show on your personal credit, but that's not always the case. With DSCR loans, we can do 1 to 4 family and still be considered residential. Anything 5 units or above now is in the commercial sector. However, we do have the ability to do 5+ units. These loans are good in all 50 states, and it allows for you to get into investing if you don't have the traditional income to show. As long as you have the 20% down, 6 months reserves, you have the ability to get into the investment game. If this video has been helpful and you would like to learn more information, or you would like to apply with my team to get more information or to see where you are in terms of getting approved for a DSCR loan, do me a huge favor. You can comment below. My contact information will be below. I'm Kevin Jefferson, the People's Lender. Thank you and have a great day.